And then I believe we are good to go. All right. Welcome, everybody. My name is Georgi Penev, and I'm co-director of the Bulgarian Fintech Association. I'm going to be your host today. Just before we start, a quick disclaimer that this webinar is being recorded, so we can share it with our members, and I hope this is okay with all of you. During the webinar, if you want to ask a question, just write it down in the chat at your right-hand side, and we will address it as soon as possible. After the presentation of our colleagues today, there is a Q&A session. So you're all invited to jump in the discussion and ask questions by yourself. And just like Ivan said, it's totally okay to jump into the discussion during the presentation. So just don't be shy, go for it. So for those of you who have never heard about the Bulgarian Fintech Association before, we are a non-profit organization uniting businesses working in the sector of financial innovation within the region of Southeastern Europe, and in particular Bulgaria. Our mission is to bring together innovation businesses and speak out loud their voices before regulators, institutions, and so on. We established the organization in the end of 2018, and so far we have exactly 46 member companies. So if you want to learn more about us, just check our website fintechbulgaria.org. So today we have gathered to meet and discuss what it's like to deploy an NML program and what are the challenges a compliance manager might experience. So I'm honored to have the opportunity to share this digital event with Ivan Stefanov. He's an AML specialist, I would say, and he has a lot of years of experience in that field. He's as well a co-founder of Notolytics. So without losing any more time, I'm giving the stage to Ivan. So go for it.
Hi everyone, thanks for the intro, Georgi. Let me just switch to full screen, and I hope everyone can see well the slides that I'm about to share today. As Georgi mentioned, today's topic is about taking a more practical approach, a more practical view to the challenges and the day-to-day issues that a compliance manager usually faces. I don't know if I have to admit everyone manually or people join automatically. And also share some good practices that we see from our customers, from our experience on AML monitoring, how it can be structured, and some practical pieces of information that I hope will make sense to everyone on today's webinar. Let me see how to switch. Yeah. So we're going to focus today on the three main areas out of the whole compliance and AML activity that different financial institutions and banks have to perform. The initial and the ongoing customer assessment, assigning risk levels to your customer portfolio of different types, gradually updating those in time with their activity and updates of their accounts. The transactional AML monitoring, one of the bigger chunks in the whole compliance space and compliance activity. The inevitable and becoming more and more stringent in the last years, PeP and Sanction screening and the requirements around it. And at the end, I want to talk about how the monitoring and the whole compliance approach can be broadened with taking a more holistic look at the customer experience and how that can be of benefit. And anytime, not just at the end, please go ahead and ask any questions. It would be really great if we can have a discussion on any of the points. So the customer risk assessment. There are two main stages of it. The initial risk assessment that happens, let's say, when you're accepting or onboarding a new customer, regardless of the channel where that takes place, whether that's an online, non-face-to-face environment, or face-to-face environment in a bank or any other institution that has that customer acquisition channel. Usually the output of that is to determine customer risk level that will position the customer in a group under specific monitoring, and it will also help kind of characterize the portfolio of customers in the customer book and basically develop different segments in it: high, medium, low risk customers, or any other methodology that has been adopted by the respective institution or organization for initial risk assessment. Once we have the customer onboarded, we have their initial risk level determined based on any input criteria that are determined to be important and of significant nature for the respective business. Then the customer journey starts. It consists of different aspects: the financial activity of the customer, the account activity itself, how the account is accessed, operated, etc., etc. And also account updates can be interesting feed of information. And all that is usually used to run further the ongoing customer assessment, whether that's periodical process or triggered on demand or triggered by some specific manual or any other event that might be, I don't know, ad hoc review of the client portfolio or of a specific customer. Looking closer at that process of customer risk assessment, some of the key areas that are worth considering when you're building your customer risk assessment process and methodology are knowing well what is your acquisition channel for customers. Do you have more than one? What are the specifics that exist in that channel, and what's the relevant information that you want to acquire about the customer and you can further use in assessing the risk level of each and every new customer. If that's a customer present environment, obviously you can collect a large number of customer details such as identity, documents, so on and so forth. In a digital environment, more or less, you can collect the same, but obviously the means of collection are different. The risk for manipulating that information is also much higher. So start with considering how do you acquire your customers and what information that acquisition channel brings over to you. Real-time versus offline. Do you need to have the customer risk level assessed right away at the customer acceptance? Is it actually open question at that stage? And does the customer acceptance depend on it? Maybe in some cases the answer is yes. In others, I guess the customer acceptance can be postponed until performing of first financial activity of the customer or some other event which triggers it. What data is available for the initial risk assessment? I guess there are different categories of inputs and factors that you can use. The customer nationality, date of birth, origin, occupation, the expected size of the business relationship. Maybe if it's an online channel, collect some information about their navigation behavior, their device, etc. So there is clearly a large number. I don't know what are these marks on the slides, not sure where they're coming from. Think carefully about what you will need right off the start, but also if you can collect more customer attributes that later might be used, maybe it's worth including those into your monitoring and screening solution as well. The methodology itself can be built in different ways. It can be a weighted, score-driven methodology for your customer risk assessment, and also can be more of a decision tree where it takes certain attributes and follows a decision path, again, deriving the initial customer risk rating. Applying the outcome, if you can calculate it in real time, and if you can have it in a matter of milliseconds, then you can make it part of the account acceptance criteria or flagging the accounts for further review. If you make it part of that journey and it changes it in a way, think about the path to resolution for the customer. If you, let's say, put their account on hold or you'll be requiring something else from them, make that clear, easily understandable and readable into a seamless user journey. So you don't actually lose customers in that process or create manual overhead to your customer service and compliance review teams. What tools? We've seen different approaches from calculating it into locked Excel files, into some hard-coded systems that sit somewhere in the back office. And once the methodology is set there, it's a bit difficult to maintain it, to using third-party vendors to run the initial customer risk assessment. Which takes me to my last point. How should you update it and how frequently? I think it's a matter of risk appetite in regards to how frequently, but also a matter of changes in your product offering or the regulatory landscape. Each of those may drive changes to revamping your customer risk assessment matrix or decision tree, or maybe slightly tweaking it to reflect any change in your business proposition, entering new markets, or changing some of the licensing regime that you operate under. And here's some useful stuff that you can use in that process. Select the right point in the customer acceptance and customer onboarding process where to do your customer risk assessment. And usually that should be a point where you've gathered all the needed inputs for your customer risk level assessment. So you don't have to maybe reach out to the customer for initial information or for additional information or for anything else that might create some back and forth. Go a little bit outside the box of customer data if you're doing an online channel. Take a look at some of the other attributes that are available in that online channel. Device data, geolocation data, maybe social media data. It's all quite valuable data if you can interpret it with the right tools. Again, if you're doing a real-time risk assessment and it influences your customer journey, provide a path to resolution. It will reduce the workflows, make your acceptance rates higher, and ultimately you offer much better customer journey. Try to choose as much as possible not subjective parameters for your risk assessment, or if you have some subjective ones, carefully weigh those in your scoring card. Let's say we're talking about a face-to-face customer acceptance scenario where you might have some input from your office staff or tower staff about the customer standing or their impression. As valuable as it can be, maybe weigh it out with the appropriate score to reflect it in your risk assessment matrix. If possible, do not rely on hard-coded risk assessment setup or tools or anything that would be difficult to update later on. It doesn't come to say that if your risk assessment methodology is adequate today, it's not going to be adequate a couple of months from now, but in more dynamic environments, it very well may change and require updates that might require further time and effort and cost if it's in some sort of an inflexible setup. Set up a process to reevaluate your risk assessment matrix and take a broader look, not just at the outputs of it, but later when using those initial risk levels, what are they bringing? Are they bringing reduced customer acceptance or internal overheads to review high-risk customers that are probably not necessarily high-risk ones? Like look at all angles, even look at your maybe customer complaints and customer service channel to see if there are any indicators on that front that might be suggesting that you're being too stringent or there is unnecessary friction caused by that. And last but not least, document all the changes. No one likes documenting, but keep a log or register of the changes so you can track the impact of every change that you make and what is actually different in your new version. Before we move forward, I wanted to show you just the NOTO perspective of how you can do your initial customer assessment. Let me just try to switch screens here. And it's our test environment. Actually, anyone can have access to it. It's a demo setup that we've built for today. It creates 3 channels in a single division that look at initial risk assessment, PeP and Sanction checks, and the ongoing AML transaction monitoring. So if we take really quickly a look at the risk assessment matrix, it may look as simple as that. The parameterization part that helps you pre-process your data with fetching the necessary information from the different lists that hold your risk levels for different type of products, reputation, and nationality. It's all just an example, can be manipulated anyway. But here is how simple your scoring matrix may look like. This one takes into consideration the country risk level.
Ivan, can I just interrupt you for a second?
Sure, yeah.
All we see now is just the presentation.
Oh, really?
Yes, sorry.
I'm not sure why this is happening. Let me...
I believe you shared only this app.
How do I share my entire screen?
So if you go to share screen.
How about now?
Yes, now I see it, yeah.
Okay, so maybe I'll go back to
yeah, probably just
the previous one. So that is the demo setup that I wanted to show you today. It has 1 division in our data tree. It has 3 different channels underneath that are dedicated to initial risk assessment, to sanctions checks, and to transactional monitoring from an ML perspective. And if we take a look at this initial one, you can see a very simple parameterization done at the end that fetches the necessary data of your customer registrations, let's say. And here are the matrix itself. It's a totally exemplary matrix, can be edited by adding new conditions to it or editing the existing one. And this one takes into account the country of nationality risk level, the country of residence risk level, the customer activity, the country of activity, sorry, risk level, grading it into a very straightforward high, medium, low classification, the product that you're offering to the customer, and some other risk factors that you may want to, the customer reputation, if something comes up, let's say, from the adverse media screening, or there is potential PEP identification happening. There is a score value to each. In each case, we've gave a score value, and if you want to update your matrix to give a higher score value, let's say to the high risk inputs, You can do it as simple as that, save it, and your customer risk rating methodology will be updated. At the bottom is your decision-making part, which calculates score for all the customer risk level forming attributes and grades your customers into final, medium, high, and low risk grades. Again, if you feel like setting different score bands, you can very easily change it for here, making this a different value. And this is just a quick and simple example how if you're feeding to a third-party system your account registrations, you can create customer risk level that later in that same data structure would be available for the ongoing transactional monitoring. Let me revert now back to my deck. Let me know if you can see the deck. Can you see the deck? Georgi, if you can help me out here.
No.
Not yet.
I guess I have to
turn it off and turn it back on.
Yeah, how about now?
Yeah, it's
No,
perfect.
Okay, cool. The other big bit that keeps compliance people awake at night and takes most of their day is the transactional AML monitoring. And by transactional, we mean all sorts of channels. And basically takes you to the first question that usually every compliance manager asks themselves when they start building a compliance program. What are all the financial tools that we offer to our customers or the payment channels? In the example of a bank, that can be not just the bank transfers or the cash deposits or cash withdrawals. Those are also the cards. And we know that niche is diversifying really significantly with products like virtual disposable pans, reloadable prepaid cards, and all sorts of other wallet products being added on top of the traditional online banking. If it's fintech like setup, I don't think the setup like Revolut, I don't think there is a need to tell everyone the different options. I'm gonna get some right today. To tell you how many different financial channels like Revolut offers to their users or any other wallet in the space. The other thing that you should consider is, or ask yourself is, do I want to decline transactions based on high money laundering risk at some point? Maybe that will not be the day one objective, but later on, if there is such a need, it's good to be planned at the initial stages of structuring your AML monitoring and the whole outfit in between third-party solutions, in-house build platforms. It's one thing to consider. What is the typical spending profile of my customer is something really important that you should get to know better before you further design any monitoring setup. So you really understand the activity that your customers develop and how your products are being used. Take a look at your customer book and see what's in there. Is it mostly individuals? Is it SMEs? Is it different size businesses, or it's a mix of those? This will also predetermine the ways that your customers use your product. So, keep that in mind. And if you don't have numbers right off the bat, then try to get some to understand what your customer book consists of. What are the integration points and why that's important? If you want to capture as many as possible of the financial flows, think where those transactions originate. What's the right point to fetch all the data that comes with that transaction and further review it and investigate it or apply some interaction in terms of declining the transaction. When it comes to taking on board third-party vendors, look carefully to understand how much customization will be needed to meet your business specifics, your goals, your objectives. That may turn out to be a significant amount. Take a look at what options are there to measure the efficiency of your monitoring scenarios or policies, or call it whatever. it's important part of your ongoing review and evaluation of those processes. And last but not least, ask yourselves, how quickly can I make changes? How quickly can I iterate and improve my setup? Obviously, in compliance in AML, the speed of iteration is not as high as in the fraud prevention space, because the whole setup is significantly different, and the approach to transactional monitoring and user monitoring is different. But still, think about what tools do you have to help you improve consistently and continuously the setup that you have. Some food for thought or things that you can take away is try to capture all financial channels that you have. If you are, let's say, in the banking shoes, don't focus just at teller and bank transfer activity, but look also at your card products. As you know, Visa and MasterCard are aggressively pushing their money send and Visa Direct products, which actually create a whole different and new incoming and outgoing transfer channel. OCTs, as it used to be called and still called in the acquiring space right now. Don't neglect entirely the non-financial activity of the customers. Look at access patterns in the online banking. That may reveal a lot of patterns and links that are not visible if you only focus at the financial activity. Take a closer look at how your customer portfolio behaves, and then start designing your scenarios for monitoring, not the other way around, because probably even if you're focusing entirely on private customers as individuals, they will be quite different from a handful, small group of high-value individuals that would be your top users to a great mass of the average person with an average income and spending habits to different groups with their characteristics like SMEs or small individual businesses. Again, review the points where you want to plug in any monitoring solution and make sure you'll be able to capture all the necessary data to run the monitoring that you want. Because if you're looking at different integration points between transaction initiation, settlement, completion, those usually carry different data, and you may want to plug in a point where you have as much as possible. Go live in silent mode, test your setup, see how it behaves with actual data, no matter that you might have uploaded some historical data. But all that, it's not really the day zero when you're going live. So launch it in test mode, troubleshoot, monitor, observe carefully. Regularly do the so-called confusion matrix, the false positives and negatives, the true and false positives. Keep, should I have a typo here? Apologies for that. Keep a look at that, and it will help you optimize the work of your compliance team, how many reviews they have to do, how loaded are they, and ultimately how much interaction you have to do with the end customers, maybe to collect additional bits of information, and making sure that you approach the right customers to investigate is also quite important. Try to revise your scenarios based on a number-driven approach, not so much on how to say single views on that, or maybe because you're getting a lot of complaints from your contact center because customers complain about certain exercise that they have to complete, like a submit a proof of income or occupational source, or any requirement as a part of the enhanced due diligence that you may want from that. Those are just a few tips that I hope you'll find useful. And let me switch windows just to give you an idea of how, let me do that thing one more time. I hope now it works.
Perfect, yeah.
Yeah, and if we take a look at the transaction monitoring bit, here is an example of several scenarios that each of them is totally made up for the purposes of the demo. And again, the number of those scenarios can be changed, the order of execution can be changed, or parameters in each and every one of them can be easily updated and just done with a few clicks. Here is one that looks at transfers coming from offshore territories, one that looks at dormant accounts over 6 or 12 months, cross-border transfers, single cash deposits and going over certain limits, and cash deposits from identified PEPs if you choose to accept them. Some velocity changes around new accounts in different periods of time, weird velocity activity on corporate accounts, weird activity on PEP accounts, like receiving payments from other end customers, or receiving transfers from multiple other accounts, something that you wouldn't necessarily expect on a PEP account. Suspicious behavior over different periods related to maybe using different branches, using different, or any suggestion of withdrawing funds from cryptocurrencies, because banks not necessarily like that. Looking at beneficiaries in high-risk countries, monitoring the loan piece if there are too many early closure of the loans or third-party payments on certain loan. And here is how, based on the above activity, going to the first step of the initial customer risk level assessment, you can take certain attributes of the customer activity and recalculate, if you want, on the go, the customer risk level, changing it from its initial state to the ongoing state, and recording that in a list for audit purposes and any review reasons. It's just a quick look on that. And if you take a look at your case management bit, you can have those channeled in different queues that, again, you can manage yourself. Here is one that will tell you, just for the sake of example, for any cash deposits coming from politically exposed people, or for high-risk transfers or high-risk customers that originate at account registration step. Let's do the limbo one more time and continue at the couple of slides that I have today. Okay, the PeP and Sanctions. It's another source of significant workload. It's usually associated with the need for extensive manual review, and it may become really cumbersome. But here are, again, our key points on it. Is the bare minimum enough? And what do we mean by that? Just looking at a local list that, let's say, we have in Bulgaria, maybe the OFAC one, or maybe you want to expand your monitoring to cover some edge cases like onboarding a customer that is a dual citizen. And, you know, let's say I have, just for the sake of example, also Canadian passport, and I'm a Canadian citizen as well. And I also keep my Bulgarian citizenship and documents, so I can onboard with this. You screen me to the local lists, but I may be very well on some Canadian lists that you'll be unaware of. It's an edge case, but quite plausible. Where to position the initial PeP and sanction screening? Again, does it need to interrupt the customer onboarding process? Does it need to happen right after that? And if it interrupts the customer onboarding process, are you going to have the capability to handle that work simultaneously and in a timely manner? So again, you keep the whole process of customer acquisition running smoothly. How much data do I need for accurate screening? Is it just the name and date of birth? Can I enhance my matches by adding things like nationality, gender, addresses, whatever is available in my onboarding process? How does my vendor collect, validate, and match the information on the list? It's pretty important to know that and see how frequently those are maintained. It will answer your question for the ongoing screening. If your vendor is let's say, updating their feeds once a month. If you set up screening in a lesser window than that, say 2 weeks, maybe it's not aiding anything additional on your end. How is matching performed by my vendor, and how much influence I have over it? Can I fine tune it? Can I have my own custom inputs in there? Like, is it some sort of Levenstein that they do? It's an algorithm for matching text strings. Are they looking at single field or combination of fields? Or how are they accounting for special characters, language translations? All that really helps you increase your accuracy. How to structure the periodical screening? What am I required to do? How I'm going to manage it workload-wise? And how frequently are my lists updated? And last but not least, look into the cost structure of those vendors. Some of them may have a lot of hidden costs in the shape and form of screening unique or non-unique entries, of additional costs per seed for access to their investigation portals. Take into account the growth of your portfolio. So you don't end up mid-contract overpaying because you haven't negotiated, let's say, a tiered pricing model, which is generally a good idea to do. And some items that I hope can make your life easier. Use as much data around the customer to improve the matching, not just the name and the date of birth. Maybe if you have it, use country of residence, country of citizenship, gender, city, state, any address details that will help further the matching. Take a closer look at the matching logic and assess what is the level of tolerance by doing some tests that will give you sufficient comfort that you are catching what you need to, and at the same time that you're not seeing too many false positives. Select the necessary lists. Don't limit just to the bare minimum of 1 or 2 generally required lists. You may want to be a bit more granular than that. Look for ways in the matching process to account for language specifics, cultural variations, prefixes that come with names like doctor, esquire, whatever, because matching text strings at first glance is simple and straightforward, but actually the complexity behind it is significant. Again, like any monitoring process, reassess carefully what you're seeing as results. What's the initial match rate that you're seeing? Is it changing? What is the actual confirmed number of PePs or sanctioned individuals or true adverse media hits that you're getting actually is versus, just build your screening funnel. And again, last but not least, when choosing such a solution, take a look at how you can, find the best commercial setup for you and for your company, obviously, because end of the day it comes to getting the most value for the right price and finding that optimum setting. And you already know the drill. I just wanted to show you some of, it's going to take a little bit of time to load, the so-called text normalizers that will help you address those specific language criteria and anything that comes with the names of your users or entities that you're going to screen. Just bear with me for a second, because the normalizers hold somewhere around 15 to 20,000 records each. And this is just one example how you can, how granular you can get within our platform to account for the different name pronunciation and spelling and transcription. The examples can be manipulated really on a per name level. So you account, here is a common name of Alexander. into how many shapes and forms it can exist, and it will really help improve your matching. Dealing with the different stop words, as we call them, all these titles attached to the names, or ooh, heavy rain. Sorry about the background noise, but my window is kind of large and that attracts a lot of rain. That may come with, either some sort of title by birds, whatever else is collected. And last but not least, getting the orthography of the different transcriptions of the special characters between different languages can be very important to further fine-tune your matching and scoring. And here is how simple you can set lookups in different lists, determine your own scores and what you want to do with them, send those for review or not, or keep the ones that you've already screened again in a separate list for further reference, or just for determining your periodical screening and repeating maybe the screening only of high percentage matches more frequently versus low percentage and low confidence matches less frequently. Again, all that comes down to driving efficiency in the monitoring process. The last point, because from our experience so far, a lot of the compliance effort in terms of monitoring of user activity goes into monitoring the financial transactions. And I think I talked about that a couple of slides ago. Look at the whole customer journey, from account onboarding to account usage to account updates, and of course the financial activity. Just to give you a few examples, if you have maybe new accounts registered on your platform, in your bank, whatever, that don't have linked activity between them, but let's say are just used to pass through funds to your institution, if someone careful enough is doing that, probably those accounts will not have any links on transactional level. But those accounts might be registered from the same area, from the same city, might have same age profile, everything that you're going to gather at account sign up stage. And then later on at account sign in or account login stage, you might be able to identify accounts being used at the same time, used from the same location, from the same device, from in the same time zone, if you like. All of that can help you drive and focus your attention on accounts that are potentially of the same group, controlled by the same person, not even the actual person that have registered and registered those accounts. And again, might actually lead you to determine and identify some financial activity that you weren't necessarily aware, because it doesn't fall within your financial transaction monitoring setup. Account updates equally, if those happen in the same time, and let's say similar updates are introduced to the accounts, like password changes into a large group of accounts at the same time, or similar password hashes, because no one would probably give you access to the raw data of the passwords, otherwise all security is gone, can actually suggest a lot of interesting findings. So if you want to expand your visibility over your customer portfolio, it's certainly worth considering the other non-financial customer interactions that exist on your platform. And they pretty much for sure exist, because if you're offering an account-based solution, that inevitably you have those stages. Those were our slides from NOTO for today. I hope what we shared has been useful. It would be great if you guys have any thoughts, questions. Let us know what you think.
All right, thanks so much, Ivan. So during the presentation, there is one question that was addressed to me. It's a pretty simple one, I believe. But what is PEP? I believe it's politically exposed person. Am I right?
Correct. Yes. It's the acronym for that. Sorry, I didn't include the full description. It's the politically exposed persons or
Right.
people.
Okay, so now it's the Q&A session. So the audience, guys, just go ahead, jump into the call and ask your questions, or just write them down in the chat on the right-hand side. I believe, Ivan, you can turn off the screen sharing if you want, but you can leave it like that. Okay, perfect.
Okay.
But in the meantime, can I just ask you one question, Ivan? I believe it's going to be okay, right?
Yeah, please go ahead.
So you have this solution that you provide to various companies, I believe, but most of them are banks. But can you give us some examples? Probably you're under NDA, but still, can you give us an example, like a really real life example, something like simple thing?
Real life examples about, sorry, maybe missed the beginning of the question.
Yeah, about how we can use this solution that you provide as a company to others, and
Yeah, it's just the solution is intended at financial services companies like digital wallets or forex trade platforms, anyone or payment processors or card issuers. Any of those have quite a significant number of obligations to conduct that compliance and AML activities and PeP and sanction screening, just like traditional banks. So even if we take as an example one of our customers, SumUp, there is a lot more what's happening behind tapping your card on the POS terminal at the coffee shop and the merchant getting their money. Part of their obligations are also to do all that from a compliance standpoint, not just move the money from your card for your morning coffee to the coffee shop's bank account.
Right. With this solution that you provide, can you give us an example, like you called somebody, like there was somebody who was doing some kind of a fraud, and just because of your solution that a specific company applied, you caught somebody in doing some fraudulent stuff? I don't know.
That would be our users sharing that. We can't really do that, because each of them has certain licensing situation, like either licensed in any country they operate, being that Bulgaria, Europe, or North America. And under that, they have the specific reporting regime, which is between them and the regulators. So, we offer really the facility to conduct the necessary monitoring and decision making in real time. But our visibility is really to that level, and the rest, even if being part of some conversations between us, it's not up to us to share.
All right, thank you so much. So just don't be shy, guys, or just write down something in the chat. That's totally fine. Even in Bulgarian, if you want. I don't know. So I guess we'll just wait a bit more time just to see if somebody comes up with a question. And this demo that you have, is it available for just to give it a try from our side? I don't know.
Yeah, anyone that wants access, there is no PII data in it. Give us an email, we'll send you a link with the access.
All right. All right. So I believe if somebody has any questions, could just ask them by mail. You can either text us or Noto with your questions, your comments, and everything that you would like to share with us. Once again, this recording is going to be shared with all of you guys who registered for the webinar. So you have the recording. You can watch it anytime you want. Um, yeah, we have one question. It's related to your link. Could you send us link to your service? Is asking Valentin.
It's the access is account based. That's the website. If you want to see the demo, just please share your email address and look out for the activation email to set up your own access to that demo. It's how the system works. But happy to give you test access to the demo. It's yeah. And again, if you have any questions, follow up with Sofia, and we'll be happy to continue the conversation. Yeah, Chris is already sharing details, so that's the best way to go about it.
Brilliant, brilliant. Okay. Okay, so I see there's no other questions. So probably it's a good time for me to do some small promoting of the BFA and some of our latest initiatives. Out of which one of them, and the most popular one, is the one with the fintech education. So just to share with all of you guys that this October we start in collaboration with Sofia University a master degree in finance and investments. And in this master degree, we have a program, a course, which is about 30 hours, and it's related to fintech and electronic banking. So we'll have about 15 companies from the Bulgarian Fintech Association that will participate in this course. They'll share their experience. We'll have a lecturer who is coming from Germany. Actually, he's a Bulgarian who was teaching finance in Germany, in Bonn, Mainz, and somewhere else. I believe there was a third city. Anyway, so this guy, he's really capable, and he's been teaching for I don't know 10 years now, something like this. And we start this master degree in October, so look out for it. It's going to be really interesting. And in the end of the master degree, and this specifically this course in fintech and e-banking, we'll have a huge conference, and it's going to be related. It's not going to be a conference, it's going to be more likely as a hackathon. So everybody who is interested in fintech and wants to have a business, to open a fintech business, he's more than welcome just to share his idea. We'll have mentors, we'll have a jury, hopefully we'll have some kind of an award in the end. This is going to be one initiative that is truly coming from the companies of the Bulgarian Fintech Association. Apart from that, next week we are having another webinar. This time it's going to be in Bulgarian, and it's related to peer-to-peer lending. So we'll have our company member Clear sharing their experience and just showing what is like to invest in peer-to-peer lending, and they'll share some thoughts and why this new way of investing and lending money, it's the way to go. So Ivan, thank you so much for your time. Thank you for the presentation. It was really nice to hear what you can offer to the people, and I believe that many businesses found this presentation really helpful and interesting, and hopefully they'll get in contact with you to have business together, something like this.
Thanks everyone for the attendance today. Have a great rest of your day, everyone. Take care.
All right, thank you so much, and stay safe.
Yep.
See you soon.